What's going on, YouTube? Welcome back to the channel. As always, I hope you're all having an amazing day so far today. I know that might be a little hard on a day like today with the stock market going down the pooper. I know it's been a very rough day. The Nasdaq's down over 2%. It's down over 800 points from the start of the week. I know things are not looking good. I know people are getting scared. They think the market's crashing. Although I'm not a professional and I'm not a financial advisor in any way, I'm just some random dude on the internet posting videos for entertainment purposes only. What I do have to say about this market crash or correction, whatever you want to call it, is that you bought these stocks, whatever company that you own, you bought them because you did your research on them. You believed in the stock to go up. So even though right now it's a scary time with everything crashing, you look at your companies, you look at your stocks, you see red. I know that it's scary and you might want to panic sell. You have paper hands. I get it. You know, you don't want to lose more money. You need to think long term about these investments and where these stocks that you own will be in a year, 6 months, 2 years, whatever your price target, whatever your range would be, because hopefully you didn't invest money that you can't afford to lose, because when it comes to investing, you should never do that. I'm not saying that this would ever happen, but there is a chance. Say one day you wake up and your brokerage account shows $0. Just, you wake up, boom, you lost everything. I know that's a scary time. I'm not saying that you're going to be perfectly okay with that happening, but you should be able to survive if that happens, meaning you should not be investing every single penny to your name in the stock market. Stocks can be tricky sometimes. A little bit of good news can, boom, send them right to the moon, and then bad news can make the stocks tank. It can be scary. But you have to think about the company that you're invested in. You have to think about whether the fundamentals change. I'm saying I'm not talking about if, the company you're invested in is tanking because bad news came out, bad earnings report, defective items, whatever the reason is that stock's tanking. That's not what I'm talking about. I'm talking about when the whole entire stock market is red. That's when you can't be scared. That's when you have to have diamond hands and keep holding. I posted a video a couple days ago about 3 stocks that I'm currently investing in during this correction, crash, whatever you want to call it. I'll link it right up here. But that's the time to buy. I believed in these stocks that I'm adding to. So I kept buying, and I'm going to keep buying as if the stock market keeps crashing. What this video is really about is an interview that Cathie Wood just did yesterday. She talks about all of her ETFs and funds and how she manages them during times like this. She also goes on and talks about Bitcoin and why she's so bullish on it, why she believes that it has a $400,000 price target. That's the price target she's been putting on it as of lately, $400,000. All I ask in return is for you to smash that thumbs up button if you do enjoy these videos, and also scroll down and make sure you click the subscribe button with the bell clicked right next to it, as it really does help me and the channel grow. Without further ado, let's get right into the interview.
In a sell-off, any sell-off, we will concentrate towards our highest conviction names. So during the coronavirus, for example, the crisis, we went down to 33 names in our flagship portfolio. Today, we're up to 55. So what we will do in an extended correction is we will concentrate the portfolio once again to the top 30, 35 stocks, because those are the ones in which we have the highest conviction, and it has been that conviction has been growing over time. In fact, when we started the firm in 2014, it took a lot to get people's attention because they thought we were too risky, too crazy. And I see now it's coming full circle because I hear that again, but it's much less risky than we believe the benchmarks are. The benchmarks are filling up with value traps because the innovation platforms, there are 5 of them, and they involve 14 different technologies that are all taking off right now. They are going to disrupt and disintermediate the traditional world order. So I think the big risk is in the benchmarks, not what we're doing. So if you talk to most analysts and portfolio managers, they're really focused on the next year or 18 months in terms of guiding their buy and sell decisions. We are not. And in fact, we want our companies to sacrifice short-term profits in order to be in the pole position to win in many of these winner-take-most markets. Artificial intelligence is causing a lot of winner-take-most markets. The companies with the best data, the highest quality data, are going to win. Tesla in the autonomous taxi network world is one of those examples. So by definition then, if our companies are investing aggressively now for going short-term profits, their valuations are going to look very rich. And that's probably the biggest criticism we get. It's on today's valuation, next year's valuation. If you give us 5 years, however, and given the exponential growth rates we're talking about, say 82% growth on average per year in the electric vehicle market, if you give us that, we are managing value portfolios. I truly believe that. Now, as you know, Tesla wasn't going to have earnings for another, I think, 10 years. Yes, going against the grain. In fact, sometimes when the sentiment is so negative, and we have good reason to believe that something differentiated is going to happen, unexpected, those are great times. I call them the valley of death. It's a saddled S-curve. The first saddle S-curve, it's kind of a fake out, too much money chasing too few opportunities too soon. That was the internet late 90s. Then in the mid 2000s, early to mid 2000s, valley of despair. Nobody wanted anything to do with these stocks. And then that's a great time to pick up stocks. And right now, 3D printing stocks have been there for a long time. And then you enter the sweet spot of the S-curve, and it's unstoppable.
This next part in the interview is where Cathie starts to talk about Bitcoin and cryptocurrency. If you've been subscribing to me for a while and been watching my videos, you know that I'm super bullish on Bitcoin. I put it as a 6-figure price target by the end of the year. I posted a video last week about a company called Marathon Digital. I'll link right up here if you want to check that video out. It's a cryptocurrency mining company that's listed on the stock market. So if, say, you don't want to own the digital, version of Bitcoin, if you don't want to actually own Bitcoin, but you're invested in the stock market and you want to have have your foot in the water of owning Bitcoin, and I definitely recommend you click up there, watch my video on Mara, and definitely check it out.
Like Square, Tesla, and MicroStrategy, the diversification into Bitcoin on their balance sheets. They are starting to build their cash positions. Can you believe 2 years ago, people thought Tesla was going to run out of cash? Now it's built its cash positions to such an extent that it's diversifying about 8% into Bitcoin. I think it's a great insurance policy. It makes a lot of sense. And it's not, meaning if we go into an inflationary period, cash will lose its purchasing power. Bitcoin will not. In fact, Bitcoin, as you can see recently, is gaining purchasing power pretty dramatically. It's what's called a deflationary currency. All that means is your purchasing power goes up over time. And so I think more innovative, tech-savvy management teams are saying, why don't we diversify? What's the reason not to diversify? And so I think this is going to happen more broadly. That's a very big deal. So Tesla put 8% of its cash. I think Square's up to 5%. MicroStrategy, all of its cash. And if all the corporations in the United States were to do that, somewhere in the 5 to, well, let's just say the 1 to 10% range, just diversifying into Bitcoin, that would add anywhere from $40,000 to $400,000 to the Bitcoin price. So it would double the Bitcoin price at a minimum. If it were only 1% diversification, it would push the price up almost 10 times. Well, we do think sports betting is losing its taint. DraftKings is becoming a platform for sports betting. States in crisis with huge deficits are going to capitulate one after another. And then one of the most mature betting states, New Jersey, DraftKings reported last week, its revenues were up 100%. Again, this was another stay-at-home beneficiary. So people said, we're going to get back to life as usual. This is going to be part of life as usual. And so New Jersey was very telling to us. And we do believe that it is a platform strategy in the space. Well, Roku, everyone asks, okay, there's a huge transition from linear TV to streaming TV. And what would you invest in, or where would you invest given the $70 billion of linear TV advertising dollars that are going to disappear and go somewhere? Where would you invest? Most people would say Facebook, Google. We would say a lot of people know that. That is no surprise. The surprise is Roku. Roku is becoming the operating system of streaming TV, of connected TVs. It and Amazon are in competition, so to speak. But Roku put its own channel. It has started its own channel and is starting to buy content for it. Quibi is one example. It has just moved on to Amazon's platform as well. So we think those two, certainly in the United States, are going to take the lion's share of the connected TV market. And Roku is moving internationally and is finding really good success. And I think that's an upside that many people don't anticipate. It's mind-blowing. Most stay-at-home beneficiaries, the stocks, they peaked in the summer last year. Zoom was cut in half from $600 to nearly $300 last week. Got the earnings report this week. And most people have been saying, okay, yeah, we're kind of getting back to normal. They got to slow down. Its growth rate accelerated from listen to this, 365% year-over-year growth to 369% year-over-year growth, a $900 million run rate, which is $3.6 billion annualized. That's what people's estimates are for 2021. They're wrong. It's going to be much higher than that. The world has changed. And I think Zoom is it's playing in the largest part of the technology stack out there, the $1.5 trillion telecommunications part of the stack. And I think it's going to usurp a lot of the old telco infrastructure. So I don't think people understand that. So we're pretty excited about it, and actually like that the sentiment right now is so negative. People think this stock at about $110 billion is selling at an outrageous multiple to sales. It is not if our estimate for this year is right. In fact, it's probably undervalued. I know people think that's outrageous, but stay tuned.
So there you have it. There's the interview with Cathie Wood. I thought it was very interesting to see her take and her opinions about certain things. I know things look really rough right now in the stock market. It's not fun waking up to see your portfolio down 5, 10, 20%, whatever it is. I know that it's tough. I know that it can be scary. You did your research, did your due diligence, and have reasons as to why you own these stocks. The meme, stocks only go up. It will bounce back eventually, but remember, I'm not a financial advisor. I'm not a professional. I'm just some random dude on the internet making videos for entertainment purposes only. With that being said, I really do appreciate you watching my video. I hope you did like it. I hope you learned something from it. If you want to see more videos like this, comment below. Also comment below on what stocks you own. If you just want to talk about the stock market, comment anything. I'm always on YouTube. I will respond to pretty much every single comment. If you're taking the time to watch my videos, I'm going to take the time to comment back to you. Make sure you do give it a thumbs up if you did enjoy the video. Make sure you are subscribed with the bell clicked right next to it so you don't miss any of my next videos. Until next time, guys, stay safe, keep hustling. Peace.